Hello YouTube! Today the bears took advantage to sell the rip. We have our worst day since 2020. That's pretty bad. Jumbo September interest rate hike now fully priced in. The yield curve inversion deepens. Bitcoin falls to nearly 20K, which means everything is down. It is down, it is down, it is down, except if you're the dollar, volatility, or treasuries. It's almost like there is quad witching happening right now. Quad witching, which means that there are more options that expire on multiple exchanges, including futures, options, single stocks, indices, ETFs, all that good stuff. And with a couple of headlines today, we note that we are now notably down. And what's really notable is just the momentum we had. We have a perfect candle if we look at this objectively, because we rejected perfectly off the 50 DMA, and we are now right back on support, which means the battle resumes tomorrow. And the reason why I say the battle resumes tomorrow is because we're right on the green line. It's where we're set to open. If we look at this chart a little bit different, like we do here on our weekly chart, we now note that we also have our resistance and support here. So as we look towards our support and resistance, well, where are we? Did I hit stop on the recording? No, I did not. Perfect. What I'm looking at here is, okay, we're at 393. Our low is at 39192. Where are we? Well, we went from being in resistance to being right here at support. So we're between support 2 and support 3. Support 2 being 402, or our 50 DMA, and our gap going back to June. And otherwise, we have 390, which is still a weekly higher low. And that is also our gap from June 10th. If we keep that number in mind, what does it tell us? Well, worst day since 2020, right? Some of the worst days are followed by best days. Bulls are going to say, bears are going to say, ha, look at the trap. We got you, right? Trapped. And why? Well, this daily chart here looks like a perfect trap. And it even has the volume to confirm it. So as we see the volume continue to bump up, it means the bears are actually flexing as we go lower. Or people are capitulating and selling, meaning I don't want to be in this market. That's important, because if this is truly going to be a climax and we're closing at the low, we should either have a higher low tomorrow and to save our uptrend, because otherwise we're going to breach it. And our absolute uptrend means that I can't draw any more uptrends after this. That's our low. That's where we bounced. We bounced here in September. If we can't bounce here, it means the bulls are losing the support line, just like the bears had 2 days above the 50, ironically, right up to resistance, power slammed it down. This market isn't a kangaroo. It doesn't know what it wants, right? Jackhammer it down, staircase up, elevator down. It's really tough out there. And if we understand that, and this is now the worst day since 2020, I want to try to leave you with a little bit of understanding of where we could go from here, because yeah, we can look at charts. Trust me, a lot of them are destroyed. What we can look at as technicians is that we currently have a higher high and higher low. We're also on our weekly support, which is our green line. This is a weekly closing basis. So when we look here to our psychology chart as well, from all-time high to where we are now, we bounced off here, we formed an IHS. This is a weekly candle close, and this pattern is still valid. It's pretty close to invalidating. It's only Tuesday, and there's a lot of trading left this week. So what does it mean? It means the market is super choppy. And we got our first red number for the week, which was CPI, coming in 8:30 this morning. And yep, the market moved big time. There was also an update that I think the market also is starting to tune into a lot more, which is a Thursday meeting happening between country R and country C. Then we also have OPEX, which is also quad witching happening on Friday. The market swung pretty hard too. So from 42 to 48, we can note that the market lost about 12.5% of fear and greed today, which means, yeah, there was like right? This is like a heart right to the dagger for the bulls, right? They really got hurt today. And it's not fun to talk about, but this is the reality we live in right now. Sell in May and go away and come back on Labor Day. And here we are. Volatility's back. September is historically the worst month of the year. Surprise, surprise. We're off to a rough start. What were the numbers? Well, this is where I think that there was a disconnect between what the market was expecting versus what was delivered. This core CPI number is notably high, 0.6, and that's a month over month. So this month versus this time last month, the core CPI was up 0.6%. A lot of that is housing, which means shelter is what they call it. And that means that we're now seeing that inflation go through to a higher term. It started with food, right? Goes to gas, goes to energy, goes to rent, goes to wages. Yeah, it's spiraling. That's what they call that. And market was already like, oh yeah, pricing in peak inflation. Yes, ka-ching, time go up, right? Negative 0.1 with PPI tomorrow, which we already know, right? PPI comes out tomorrow. It's black and underlined. That comes in red or green. I don't know how the market's going to react, but the stakes are high. And there we go. So market was already priced in for negative 0.1. It's like, peak inflation calling it. Time to go buy the dip. And I'd be very curious if in the comment section you could tell me whether we are in a buy the dip or sell the rip market. This is what I was talking about in regards to, again, PPI being in focus tomorrow, also projecting a negative 0.1. Let me just show the number. Tomorrow, PPI, expecting negative 0.1. Last time it was negative 0.5. And by just looking at the graph, I wasn't planning on doing this, but maybe it's worthwhile to just do this today. Because I think that what people might appreciate is just, what's a trend, right? Oh my goodness, what's a trend? Yeah, what's a trend? So if we look at core CPI and look at PPI, what do we have here? Well, the trend is, right, we're going up, and then we got one number that's negative. Okay, well, if it's one number that's negative, that's cool. If it's two, okay, starting to make a trend. If it's three, whoa, right? Maybe there's a change in the trend happening. As of right now, again, CPI came in hot. So there is no, right? We went to like 0.1, then we went to 0.3. But this core CPI, which is what the Fed's looking at, is like, whoa, we've had 3 times red in 2020. But yeah, there's been inflation every single month going back since then. Rocked up here high in 2021 in July and in May. And now we're elevated here at 0.6 month over month. This is compounding, right? This is how inflation starts to get out of control or being unanchored. So what's the trend? Up. And then flatline. I don't know where we go from here, but the market in terms of being peak inflation, not so much. If we zoom out, whoa, right? Oh, crap, 1980. That's what everyone keeps talking about, yep. So massive cup and handle forming. Where could it go to? 1. If this is a lower high, like we got to stop. We can't get above the peak here, I don't know, like 0.8. We got to cool it off, right? Which means that the Fed might have to go 100 basis points. I'm not here to tell you what they're going to hike by, but other people are telling you, right? Larry Summers says 100 basis points. So if we look at these trends, what it means is that I think the Fed is like currently like, oh goodness, right? Yeah, very happy we talked up that bearish rhetoric, and I think that right now, again, I'm not a financial advisor. I can't tell you what to do, but here's what I think is going to happen for my personal base case. I think they're going to do 75. And the reason why is because if they do 100, they're signaling to the market that, yeah, market's right, we're behind. And the market's like, what? We're behind? Oh, no. And that's where things could start to get out of control. So they go 75 here, and then they have optionality for the next meeting. If they were only going to do 25, now they could do 50. Or if they were going to do 50, now they could do 75. And I think that something's going to break. If it's already broken, that's what we don't know. I don't know if something's already broken. And when we look at the chart here, we have to understand that bottoming is a process. So low, higher low, higher low. We have to lose last week's low for there to be a confirmation of the trend, 388.42. And on the weekend, we went through and explained this in detail. If you look at QQQ or the Qs, let's look and see what they're doing. We got our green and red lines as well. Support is all the way down here at negative 40. Oh no. And we're rejecting here off of a 2020 high. So what does it mean? Oh no, we got a breach here. We got a higher high, got a higher low. We're at the low of the week. It's only Tuesday. What do we say? Well, it's tough to say. I don't know. Why? Well, again, the math is working out. The pattern's working out. So what we want to look at next is going to be, okay, we have all these dates here. We have the economic calendar. Oh no, this is like the next thing here, right? Starting, again, Taiwan lobbying EU to prepare possible sanctions. Exclusive U.S. and early discussions on sanctions. Whoop! Right? What does this mean? Decide for yourself. Just making you aware of it because I mentioned it yesterday. So we got the PPI number out tomorrow, which means we're going to be focusing on what the data tells us, the totality of the data, before we have Jerome Powell next Wednesday. And then there is geopolitical uncertainty, which is the reason why we have a Y bull or Y bear case. The CPI print. Whoa! Came in with a surprise. Totality of data. That's where tomorrow starts to also play in. East meets West, right? Yeah. East meets west, west meets west, da, yeah. We'll see what happens. Right, west is best all the way. Earnings season, and then we got the SEP coming out next week, or the summary of economic projections. So putting it all together, we don't want to be this. We do not want to be a fish swimming upstream, which means that what's the dominant pattern? If we are objective about this, meaning what has actually been happening? Okay, well, what's actually been happening is that we're pointing down and we're losing the green line. So we are a fish swimming upstream right now. It looked the same way for the last 3 weeks when we're at the low. So yes, sometimes I say we're bearish. Sometimes I say we're bullish. It's a matter of, inside of here, there are 15 days. Why? That's 3 weeks. And during 15 days, when we go from 390 to 410, that's a long time to be wrong. It's a long time to be wrong or to wait for your trades to be materializing, which is why on a weekly video and a daily video, we do different stuff. And today we have to just be mindful that we still have a higher high and a higher low. The potential is it becomes a bearish engulfing candle, and that kickstarts us going down. And the more we do that, the more that the 2008 pattern comes into play. But we still have to get below 360 for that to happen. So if we're the fish not swimming upstream, yes, there is still a lot of downside we have to get to before we actually confirm we're doing that. We have to go below 360 first. I think it's 362. Yeah, 36217. We got to lose that 36217. And if we do that, then maybe we're going to go there. Otherwise, again, I can still see a bullish pattern here. It's this IHS. I just think that it's getting more difficult to get bullish on something to invest in other than just trying to trade it or swing trade it. There's no real investment opportunities right now. And that's what's difficult. So if we don't want to be the fish swimming upstream, what happens when they get to the top? Yeah, they're dead. That's what happens. They get to the top, they're dead. So you spend all this time and energy swimming upstream for what? Just to die? I don't want to do that. This is when it's time to sideline if you don't know or have a clear plan on what to do, which is what I suggested this morning in the pre-market. Don't have a clear plan? Sit on the sidelines. If we're not swimming upstream and we look at the bear market targets, we can ask ourselves, have the bears made significant progress? Whether or not we're looking at a chart. The answer is yes. So when we look here, okay, started at 400. That's where the target started. Yes. So, 440s, 432, 400, 384. 384. I want to focus on that number here for a moment. And I'm going to look at the options chain for Friday, September 16th, because there's something that's really notable here. With the VIX being at its current level for Friday, which is going to be the monthly expiry on the 16s, we note that the 390 put is gushing here. 395 one's really busy too. 400 is right here as well. But what I want to look at is the out of the money put by about $3, or again, just under 1%, roughly 0.75. These are still worth about $3.30. They got up 10x today. That's 1,000%. So these babies here went up bigly. They went up massively right here. And because they went up massively, I want to watch that open interest tomorrow to see what happens. But I'm also paying particular attention to what that break even is. 390, which is the strike, minus 3.3, which is the premium, gives us 386.7, which means that is the break even price for Friday. 386.7. What would that be? That would be a weekly lower low. So if these guys want to get paid, they're saying, hey, weekly lower low. And 395, what are those worth? Well, 395 is worth $5.70. So 395 minus 5.7 means 389.3. If these guys are going to get their money back, we need 389.3. Okay, let's look at our weekly chart one more time. 389, right? That's what we need to hold on to for this week. Yes, we hold roughly 389 to 390. That's a weekly high or low. And that's a higher high, and then we defer to next week. And that's what's quite difficult here, is that it's not easy to call it one way or the other. And I don't know if no, I don't have the screenshot with the kangaroo, but yeah, I do actually. So just looking here, I think what's really important is just understanding that as we currently sit at these levels, we are between a kangaroo. We're into a bear market now. Like we're bouncing around between kangaroo and bear, and the reason why is because yes, right, there's volatility. It's normally happening this time of the year. We're not sure what the Fed's doing. We're we're pivoting, we're bouncing, we're flatlining, we're going to hover. Now it's higher for longer. Now it's above 4% terminal rate for next year, blah, blah, blah. So what that means is that the market is repricing. That's what a kangaroo is. It's when you can have different big banks all telling you different stuff. Oh, we're going to close at 440 today. That's what Stifel said. Oh yeah, inflation's going to be the catalyst for us to go to 4,400. And then you got other people just like Jeremy Grantham, who's like, still see potential downside of 26% or something this morning. What does that mean? It means people are positioned on both sides. And as people are positioned on both sides, it means that, yes, that's a kangaroo. That's positioning. And then when people are positioned and have won, you only know that looking back in hindsight. So right now, what the bulls need is they have to get us back above 405. That is the make or break. As long as we're below 405, the 50 DMA is going to keep curling up. We're going to break our weekly uptrend. And that's kind of like, it's not real so good for the bulls. So right now on a daily chart, we have the chance to bounce back. It could bounce back violently. It could be nice. It could be big. It could be beautiful. But if it is not, be prepared for where we could go from here. It might not be a straight line down, but we're watching for 364 right now, which is 362. 364 was last year's low. What does that mean? Oh, 36482. That is last year's low. Okay, this is interesting too. So 378.48 is the 2020 high. That's important for us to keep in mind too. I think I have it on here. Yeah, 2020 high, 378. So 384 is like around where the break even is for just those Friday puts, let alone for next month. I'm not even going to look at that because of course the numbers are going to be big. We'll look at that when we get closer. 370, 360, check. 360 next. We got the 200 weekly and we got the 50 monthly. Those are big numbers. And we got 330, which is the 2020 all-time high, and a 30% drop at 336. Those numbers are pretty scary. And I just want to go back to the chart here. This one really fast. It's already been a long video, but hopefully you guys are going to be enjoying this one. And if you do, please smash a thumbs up, drop a comment. We always appreciate that. Looking here, we're right around the pink line again. Right now it's at about 398. And if we cannot hold on to that, that is where I will be watching for what's going to happen after complacency. And again, thank you to everybody who leaves a comment because whether you realize it or not, you always help me because I am checking myself in my theory with what people are posting. And when I hear complacency of, oh, Justin's flip-flopping, or, oh, look at this, and, oh, well, you said this, and blah, blah, blah. I think that. I like every comment. And this sounded like complacency to me. We just have to cool off for the next big rally. So if now I start seeing more comments like, why am I getting, whoa, oh my God, right? The rip is taking longer than expected. Why am I getting margin calls, right? That's going to be very interesting. So I'm just going to leave it there. It's already been a longer video. Thank you so much for watching. PPI in focus tomorrow. Then we got the East meeting. And again, I'm praying for peace. I'm just prepared for what if it's not. Thank you for watching. Look forward to seeing you tomorrow. Thanks.